Dear viewers, welcome to this episode of Expert Speak. There are a lot of NRIs who keep coming back to India year after year after they complete their service overseas or for whatever the reasons they have to come back. Returning NRIs face a lot of challenges. When they are NRIs, they have an NRE bank account, tax-free account. They have the FCNR accounts where they can hold international currencies in the form of fixed deposits. All these things would change when you come back. So it requires a lot of planning once you come back from a point of view of taxation, point of view of which currency to hold and what all the things that need to be done. In this episode, we are going to talk to you about how the RFC account, the resident foreign currency account, which you can utilize to manage your currency exposure to currencies which are other than the INR. This is NRI Money Clinic for you, and I am Dr. Chandra Kambal, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Our dear viewers, expert of the week is Chartered Accountant Arun Tiwari. Mr. Arun Tiwari hails from Mumbai, comes with a rich experience. He is a chartered accountant by profession. He has worked with a big audit firm called EY before he started on his own. He comes with knowledge of the stock markets, real estate, NRI taxation, and he has helped countless NRIs in managing taxes and various audit-related issues for the NRI community. He has done multiple videos on my channel, giving you the inputs on how you can manage selling of your the real estate, what are the things that you need to do when you decide to sell your properties and buy the properties as well. Videos which have been done has been well received by the NRI community. Today, he is going to talk to you about how best you can make use of RFC account to manage your funds when you come back to India. Welcome to this episode, Mr. Arun Tiwari, all over again.
Yeah, thank you, first of all, Chandrakant sir, to giving me another opportunity on this stage. And in today's video, I'm going to talk about RFC because most of the time when the NRI is returning to India, they got a very big dilemma because they have funds abroad, they have pension which is coming in foreign currency. Okay, maybe when they are coming back to India, the time for conversion is not right. Maybe they want to maintain their fund in the foreign currency. So they really have a dilemma because once they become a resident, they have to close their NRE and NRO account. So in that case, I think RFC can help. And in this video, I'm going to explain about how all those people who want to return to India can use this benefit.
RFC, as I understand, is a banking account which is meant for NRIs, but you can't have an RFC account when you are an NRI. So it is something that you can have it when you relinquish your NRI status. Is my understanding correct, Arun?
Basically, yes. See, it's basically a facility for returning NRIs who are coming India on a permanent basis. Okay, so because in government, like once you become a resident, you cannot hold NRE or NRO account, but still you have assets. And so basically the government of India, or you can say RBI, want to facilitate an option where you can hold your asset till the time you want, which you have earned abroad, and you can bring it in a systematic way. So there will not be any rush to bring all the assets and convert it to rupees.
Arun, now you told about the RFC account. Can you tell me who specifically can hold RFC account, or which are the forms the RFC accounts can be held by the returning NRIs, the category of people?
Okay, so let me tell you, see, there are two things about the NRI. The NRI status is spoken in Income Tax Act, as well as it has spoken in FEMA Act, Foreign Exchange Management Act. So FEMA Act basically says when you decide that you are coming India on permanent basis, then and there you become a resident. But income tax says that after only 182 days, staying continuously or in a year in India, you will become a resident. Now there is a difference, understand? But basically, when you talk about currency movement or asset movement, FEMA takes care, not the income tax, because income tax only takes care of tax part. So this RFC facility is provided in FEMA, not in income tax. So today we are mostly focusing on FEMA Act, not on income tax. So any person who is coming in India with the intention to staying here permanently can open a RFC account. Another thing you need to be taken care. When you become a resident in India, that means when your intention is clear that you are coming India on a permanent basis, you should approach your bank and close your NRE and NRO account. Because basically, as per FEMA, you cannot hold those accounts. Now, again, I'm telling this for repetition. The NRE and NRO account, this facility is mentioned in FEMA, not in income tax. So sometimes people say, okay, I will close this after 182 days, or maybe when I become resident as per Income Tax Act. No, you have to be resident as per FEMA Act. So that's what I'm saying. The intention is more important than the number of days. So once the intention is clear that you are coming here on permanent basis, you have to first surrender your NRE, NRO account, and then in the same bank, you can open RFC account. So maybe whatever assets are lying in NRE account, you can transfer to RFC account. Again, one thing I'm telling you, if you have FD in NRE account, you can hold that FD till maturity. But if you're holding, suppose saving account, NRE account as a saving account, and there is a foreign currency line, you have to transfer to RFC account. So in a nutshell, if say every person who is a NRI returning India on a permanent basis, they can use this facility called RFC account.
If somebody has an FCNR account, which many people have, how the FCNR account has to be handled? At what point of time they have to be converted into RFCs or converted into resident INR accounts?
So basically the same thing apply on FCNR account. So if you're holding the FCNR account, there is a FD you are holding. You can hold the FD till maturity, but there is a balance lying in the saving account. Then you have to transfer to the RFC account, because as a resident, you cannot hold even FCNR account.
Which means to say, if an NRI, returning NRI has got an FCNR account and he has converted that into an FD account. So if he has booked it for whatever the duration of time he has as an FCNR, he can continue to hold it. Once it is out of the maturity, you suggest that it should be moved into RFC account. Am I right?
It's not suggestion. It's a mandatory. He has to convert into. He has to take all the proceeds to the FC. If you want to hold in foreign currency account, yes, he has to go to RFC account. If he doesn't want to hold in foreign currency, then he can transfer to his saving account.
So my understanding is that suppose you hold an NRE account or you hold an FCNR account, the returning NRI has an option that you can continue to hold the NRE FDs, but FD can be continued, but it has to be redesignated as resident FDs, which is denominated in INR. The alternatively, you can convert this into RFC and convert it into any one of the foreign currencies which is permitted by the bank, and you can hold it permanently in your life. The same thing holds in case of FCNR also. If you are holding the FCNR, hold it till maturity, and once it gets matured, you either move it to an RFC account or you move it to your Indian SB account. Is my understanding correct?
Yeah, it's absolutely right.
Arun, let's say that returning NRI opens an RFC account. What is the tenure or how many years returning NRI can hold on to RFC account? Is there a durational limits around it? What does the law say?
So basically, I want to say that there is no time limit has been prescribed. If you have earned a foreign asset, which is basically you brought in a foreign currency to India, you can hold it into RFC account as long as you want. So, okay. But let me also tell you generally how NRIs use that. They generally use for the right opportunity to convert into Indian rupees, or maybe right opportunity when they want to buy some assets. Right. So as long as if you want to hold in RFC account, there is no limitation. There is nothing like that 4 year or 5 year after that you have to liquidate and move everything in saving account. Nothing like that. Only condition is this: only those assets which you have accumulated in a foreign currency or you have earned abroad, that only can be brought into RFC. One thing I want to clear here: sometime what happens? Somebody gives you a gift in say foreign currency, maybe your parent or somebody, and then you're bringing back that gift. That gift generally you should avoid putting in RFC, because basically it is not earned by you in foreign currency. So maybe in future it can be an issue with FEMA also and in income tax also. So that amount you should bring into your saving account by converting.
So an RFC account to that extent has a restriction that whatever the assets you have earned and held outside of India, or the periodical payments that you may get by virtue of maturity of the products, the pension cash flows, or maturity of your policies, these monies can be brought into the RFC account, including your end of service benefit, liquidation of your assets, which you can prove that it is your own assets. Those can be brought into RFC account. But just because the monies has been acquired from overseas, as you said, like gifts and other things, that such money should not get into the RFC account. A care should be taken. And if it is questioned by the income tax, you should be in a position to explain that it is your own or monies which are gone into the RFC account.
Right.
Now, my next question is, why should a NRI, a returning NRI, should make use of these RFC account? What are the core benefits of these RFC accounts?
Okay. So this is very important because see what happened, the RFC account, whatever money you are keeping, it is under no restriction. For example, if you are suppose a resident Indian and you want to transfer your say money abroad, there is a restriction in FEMA, like you have to take 15 CACB. It should not be more than a particular limit for a year. Okay. But whatever amount is kept in RFC, you are free to use without any 15 CACB, without any restriction on outward, you can say money transfer. So what is good thing? Maybe you can use this money for investment in foreign stocks. Okay, you can use this money to maybe buy some asset abroad. Even you are say resident, you want to buy asset for maybe for your children. Maybe you want to buy an asset for yourself in other country just for diversification purpose. So this all money is available without any restriction in FEMA. So this is the biggest benefit. Second thing you understand is the conversion rate. Sometimes what happen when you are coming to India, moving to India, maybe the conversion rate is not very favorable. Okay, so if you convert all the money at one go, even the conversion cost will be very high, right? So what you can choose, you can keep all your money when you're bringing here in India, and then slowly you can move into India, maybe like as and when you require, and as and when you find it appropriate or beneficial to you. So you can understand the financial aspect, right? Second, some people may ask, okay, fine, if I earn, suppose. So yeah, one more thing I want to explain. RFC account is generally they are FDs. Okay, most of the bank will not allow saving account in RFC because there is a problem on mark to market on daily basis because then you have to mark the currency in foreign asset. One more thing I'm telling you, because some bank will only allow 2 or 3 major currencies to be hold, like you can hold in pound or maybe dollar, but not all the currency. Like if you want to keep it in maybe ruble or something else, that may not be possible. So only 3 or 4 currency basically they offer, and FD they offer, but you can either break the FD also, you can take some loan on FD also for your purpose. So that facility is also without breaking FD, still you can use that fund. So it is very good for the return part also. So just understand, you're keeping your fund in the foreign currency. You can use taking a loan on that also, and you can bring the money as per your requirement, as and when you find it beneficial. So many benefits are there, which was not earlier available because earlier, before the FEMA came into existence, you had to bring all the assets mandatorily into rupees when you're coming back to India. And it was a big hurdle for most of people.
So the biggest advantage, as I can see, are two. One thing, you can time the bringing of your forensic currency, what you have held outside. You can time it as per your best judgment. Okay, rates are comfortable for me. This is the time I'll bring it and I'll keep it in RFC. The second thing is repatriability. You need no one's permission to move this money from India to abroad. You decide to transfer it to your children if they are living outside, or you have some liabilities which you are still pending outside of India, like you have to pay for your insurance policies or buying of properties, EMI, bank loans, whatever could be that. For that, servicing becomes easier with an RFC account. And obviously,
Right.
if you're a person who is concerned with what might happen to Indian rupee over a period of time, I should get the best benefit of the depreciation of the rupee whenever that happens. That gives the opportunity. So control over when you can bring the money in, control over how you can repatriate the money, how you can utilize, and the best probability to make most out of the currency movements or to benefit for yourself. These are the primary core benefits of RFs. Is that correct, Arun?
Right.
Arun, one aspect I forgot to ask you, how will be the taxation of these RFC accounts in India?
Okay. So the taxation of RFC income will be as per income tax residential status. So one person has to see his residential status. If he's the NRI, then interest will be tax free. Once he become resident as per the Income Tax Act, the interest income will become taxable in India.
Arun, one thing I've observed in case of all these bank accounts taxation, there are a lot of twists and turns and individual related cases. If somebody is more interested to know the specifics, finer points of this RFC account, where can they find that data?
Yeah. So see, basically, I also feel it is quite a big, you can say, topic and not possible to cover in this video. So I have forwarded you one document. You can link that document in the description box and people can download and read more about this RFC scheme.
Thank you, Arun. I will definitely provide that link in the description box below. The viewers who want to have more information on RFC account, the finer points of law, you can download this document from the description box below and you can know the answers for yourself. Thank you very much for your kindness, Arun, to come all over here and share your knowledge about the resident foreign currency account, which will be a boon for the returning NRIs. Thank you very much.
Most welcome, Chandrakant sir, again for giving this opportunity. And if anybody has any further query on this, they can mention in the question answer, and I will try to answer those questions if possible.
Thank you. Thank you so much. Dear viewers, hope the video we have done on the RFC account would have given you an idea how you can manage your funds once you come back to India, in case if you have an intention to maintain them as a foreign currency account. All the information pertaining to this, who can hold it, how long you can hold it, taxation, and various other aspects have been discussed in this video. If it did add to your knowledge, please do give me a thumbs up. If you are a person who is watching this channel for the first time or yet to subscribe for the channel, please hit that subscribe button and press the bell icon. Do not forget to share these videos in all the WhatsApp groups on which you are connected with your friends, relatives, and everyone else who matters. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another expert in yet another video next Tuesday. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.